Good morning, everyone. Thanks for joining us this morning. This is Matt Tour, marketing specialist at Insurance Agency Marketing. Been here over 20 years, worked on the annuity end most of the time. So great year to be in annuities here in 2023. Best rates we've seen on cap rates, fixed rates, rates in general for more than 20 years. Haven't seen rates this good since the late 90s. And our business is percolating big time this year. We're up about 30% plus on business across the board. And I'm sure you've seen a big increase in interested parties looking at diversifying out of the market, looking at diversifying out of bonds. Really a great time to be in this annuity space. And we'll be joining here shortly by Tim Heltman. He's an internal wholesaler with EquiTrust. Tim's been in the business for well over 10 years, really specialized in the annuity side of the business for the last 10 years plus. So he has a really good background on annuities in general, how things work. He'll be discussing the Bridge long-term care annuity that EquiTrust offers, really a hot product right now. Extremely good accumulation rates, really good coverage for clients looking for long-term care coverage. And they have 3 different rate classes he'll be discussing, a lot of good information that Tim will be going over here shortly. We at Insurance Agency Marketing continue to offer our new producer perks, good ways to get some additional incentives based on your early production with IMS, levels between 100,000 and $1 million. As you write more business, the quality of the perk grows. We've got some great lead systems. We've got seminar systems. We've got iPads, cash, a lot of really great stuff you can choose from. So definitely keep that in mind on what we're offering there on those new levels of production. We also have a referral program. You refer agents to IMS, you get a nice little override on their business. We also have marketing reimbursement. We have a marketing account that grows. As your business grows, we put $100 in for every $100,000 of indexed annuity premium you write. You submit us receipts, we'll go ahead and reimburse half your cost. So if you submitted $3,000 receipts, that gets you $1,500 in marketing reimbursement. So great option there on both sides. You can earn some great money on referrals. Plus you can bank some really good advertising dollars. Will help you out with your marketing costs based on that. Really good feature we offer here at IMS. We have our back office support team, a great new business team. They help you from start to finish. We utilize a lot of Firelight apps now. A lot of people are using the e-apps. Really helps speed up the process. You turn a 2-week process into a 2-day process. So definitely take full advantage of the Firelight system. Great way for you to speed up the whole process of getting applications through. With applications being 50 pages with a lot of companies now, it definitely helps because you're not able to submit the app until it's all complete. That is one key feature that is huge with the e-app system, having a long app with all the information inputted. So keep your mind on that. We also have a great creative team, and they help you with your advertising needs. We've got the marketers here on both the life and annuity side. Lots of great experience. They can help you out with getting things done and give you some good sales ideas, some good advertising ideas, a lot of good stuff we can help you out with. We have our website, www.imsinc.com. Been up and running for well over 15 years. Great information you can pull out based on current interest rates, advertising. We have a sales library, a lot of good industry links. Maybe you want to pull up a website of a state insurance department, maybe look at some AM Best information, tax information, whatever it might be. We have a lot of really high quality links you can go to based on those needs. As I mentioned, when you use Firelight, it's a e-app system. Really helps accelerate that application process. A lot of companies are taking a very long time on transferring money. The sooner we can get through the initial steps, the better, and really helps out getting things moving with those cases. We also have, as I mentioned, our creative team can help you out with advertising. We've seen a lot of people using the social media advertising, doing emails, putting together some different logo designs, helping out with colors of your business cards, brochures, whatever it might be, handouts. They can really help you out that process. We've got, I believe, 5 members on that team now that help with the advertising side and the creative team. We've got some individuals who've been doing this for a long time, so they got some great examples of things they've done for others in the past. You could take a look at some websites, you could look at some mailings, whatever it might be. I'm sure we have most of that covered for you, and a good way to get your name in front of more clients and lead to more business. So definitely a win-win for you and your clients in your business there. We've got our wealth management side of the business. I know we've seen this grow substantially this year based on what the market's been doing. We've seen a huge increase in amount of assets under management with a lot of different people utilizing that side of it. I'm going to launch a quick poll here. If you'd like to have one of our wealth management people give you a buzz and go over some information with you based on what we have on that side of it, mark off yes. I'll have Duncan Smith, one of our specialists on that side, give you a call, kind of go over what needs to be done to get you on board on this Series 65 with IMS. It is a little bit of a timely process, takes a few weeks to get that done. And if you have not taken your Series 65, he can help you out with the testing side of it, help you with what you need to review to get your test passed and all that good stuff. But if you do have interest in looking at the wealth management side of IMS, we'll be glad to get one of our specialists in touch with you. And it shouldn't take long for them to get back in touch once you've marked off yes if you do have interest in looking more into it. I'll leave this poll open for another 20 seconds or so. Again, if you do have interest, I know we have a lot of different investment platforms. We've got really good service side with them. We've got a lot of good service specialists here at IMS Wealth. I'd be glad to help you out getting things moving. But we have seen a huge increase in AUM the last 2 years. More agents moving more of their AUM business to IMS. Really a good combination with the insurance side. So I'll go ahead and get that closed up. And if you do have any questions on that side, you always feel free to give us a call. We would be glad to help you. We also offer our 2-day training. We've got one coming up the beginning of August. I believe it's the 9th through the 11th. We're holding that here at our home office in Omaha. We bring in about 25 to 30 agents at a time. Really great way to get some training, sales ideas, bounce some ideas off some other really good salesmen. We'll do a roundtable event where we have some of our higher end producers. We'll go over some ideas that they use in the field, getting in front of more clients, getting more sales closed. A lot of great stuff they'll cover during that. If you have interest in that, I'm going to launch a quick poll on that side of it. We'll do another one probably in October, probably do that in Des Moines. But this one's going to be here in Omaha. We got a couple of really good sponsors, including EquiTrust, sponsoring today's webinar. They'll be a main sponsor for that meeting in early August. I know we already have about 26 spots filled. We've got about 4 more to go. If you have interest in coming out to that meeting, it is all expense paid. We take care of your travel. We take care of your lodging, your food. Everything's taken care of. And a great way to get to meet some of the staff here at IMS, some of the new business team, creative team, marketers. We'll have tours of our office. We have a really nice meeting room we utilize for these get-togethers. Go to some fantastic dinners. A great combination. And we probably have about 15 speakers who'll be speaking at this event. So, and we got Jason Goodrich coming in. He's the Chief Marketing Officer at EquiTrust. He's got some great information he'll be sharing at the meeting. Good to have Jason in town. We also have some other various speakers, some specialists with some lead companies, some software program specialists. We'll go over some of the programs they offer to agents to, for prospecting and everything else. Great program. So if you're interested in coming out, mark off yes. I'll leave this open for another 20 seconds. Be glad to bring you into our next meeting. We do require you to be licensed through IMS to attend. we prefer you are licensed with one of the marketing co-op companies, including EquiTrust for this one in August. So definitely do keep that in mind. I'll go ahead and get this closed up here. Keep things moving along. Based on that, we do offer a 18-month qualification towards a fantastic trip. This next one's going to be to the sanctuary at Kiawah Island. I know they had the Ryder Cup event there back in the 90s. Great Ryder Cup they offered, or they had there at Kiawah Island. And it's got a beautiful location there right on the beaches there in South Carolina. We look forward to having a big group of people in. Qualification started in June, or actually July of 2022. It runs through December of 2023, 4.5 million points to qualify. All of your production qualifies towards the trip, be it annuities, life insurance, long-term care, Medicare, whatever it might be. It all qualifies for the trip. So looking forward to having another great group of people in for that trip. We'll probably have about 70 agents and their spouses join us, and should be a really good time there in South Carolina. That trip itself is going to be April the 14th to the 18th of April in 2024. So it'll be just after the first quarter of 2024. So should be a great time there in Carolina. You can also follow us on Facebook and LinkedIn. We got presence on both social sites. I'm not a big social guy on those sites, so I do not partake, but I know a lot of people do in Facebook and LinkedIn. And we have a lot of different advertising we do utilize on those sites, so definitely keep in mind that those are available through IMES. Once again, we are glad to be joined today by Tim Heltman. I'm going to go ahead and change presenters here to Tim. So Tim's going to be going through a lot of great information on what EquiTrust offers in the annuity and long-term care side on these combo contracts. Tim, your screen is on.
Are you seeing the wrong screen? Are you seeing the right screen or wrong screen?
I'm in the screen. You're hitting display settings. So
how does that look?
You're up and running now.
There we go. Appreciate the time. Appreciate the time. Thank you very, very much. Matt, obviously the relationship with EquiTrust and IAMS goes a long, long way back. So appreciate all the business you guys have sent our way. Appreciate everyone taking some time out of their busy, I guess, summer months to hear a little bit about the bridge. I'm going to keep this short and sweet. I know we can go into a lot of detail on a one-on-one basis, but I want to get everyone a nice appetizer, kind of a nice overview of the bridge before we dive into those nice conversation. So hopefully by now you guys have all seen or heard about the bridge. We are very excited here at EquiTrust. Product launch basically late last year. Some states, it's been a little more recent. We're still waiting on some states as well. I can cover that towards the end, but very excited about the production we're receiving. The feedback from the field is outstanding. I've been in this industry for 10 plus years, mostly pitch FIAs and just fixed products, and the amount of excitement around this product with the field force is through the roof, and we're super excited to be here today and provide you this information and content. So appreciate it very much. You know, I forget to always say this until the very, very end, so I want to be nice, crystal clear here before I dive into this product. We might have to change our mindset about the product and the client just a tad bit for maybe our base consumer that we try to drive to as far as like 401k type rollovers. This is a non-qualified product only as far as new funds coming into the bridge. So just kind of remember that when you're thinking about a client along the way, thinking about this hybrid long-term care product with EquiTrust, think non-qualified only, and I'll go into some details as far as who maybe those clients would be a nice conversation starter with just some examples as well. So once again, thank you for the time, and very excited to start here today. So what makes the bridge so special? And here's just kind of a brief overview of some of the things we'll be talking about today. I'm just going to give you some facts about the long-term care coverage individuals are experiencing today, really where we're different. Why think EquiTrust when it comes to long-term care? A great wellness program I'm going to hit, just super high-level view. Some of the product details. I'm getting a lot of traction just talking about the base underlying fixed index annuity about this product, not even having to talk about the long-term care because of the excitement within the growth or accumulation options inside of the base product. So it's an awesome opportunity to revisit existing clients, really where we can position this. And I'm not going to go into much of the licensing and training. That's not my expertise as far as licensing goes, but I'll pull up the state requirements. And because we are on a webinar feature today, the videos don't really work. So if we get into a little issue, me clicking on the wrong link on one of the slides, I apologize, but we'll keep it moving here. So why Bridge? Why is this excitement surrounding EquiTrust in this product? Why are you guys sitting here today, using time to learn about this product and how we're different is what we're going to cover here, and really what I want you guys to build upon from here and then future conversations. One thing here I want to highlight: it's a customized long-term care benefit. One size fits none. We're not going to back your client into a corner with this product. You're going to have flexible options along the way, including different allocation options on the base side of the contract. So it's not just a one-size-fit-all. Not all clients will look the same. A huge benefit is the indemnity claim process. I don't know of another product out there in the industry that doesn't require any type of receipts like this hybrid long-term care product that we have here on an FIA chassis. We have a really cool wellness program. A lot of you on this call, if you're more on the FIA side of the world, you might not think it's a great benefit. I'm getting tons of response from the health side, more life producers that love this wellness program, having 2-3 hour conversations about how they can benefit their clients. So an awesome opportunity there as well. It's a simplified underwriting process. We don't have a height weight chart. We don't have a tobacco, non-tobacco. We have 5 questions. You can answer yes to the first 3, no, even to the second and third. You can still go through the underwriting process and have a chance for preferred, standard, and then automatically every single one of your clients, if you have a conversation with, can get secure. So it's an amazing opportunity. It is a completely digital process. I know some people will love it, some people won't, but at the same time, it's kind of where we're heading to in this industry. It's a seamless process. We have some help along the way and a really cool guide I can share with you. So why Bridge? Why really are people excited about this product? Why are people excited about talking about long-term care, right? I think of my neighbors a lot of time, Randy and Carolyn, and I did ask for permission so I can use their names, and yes, they're my real neighbors. They're going through this process of aging, right? They're in their mid-60s, and they want to do what's called age in place. And I'll bring that up multiple times throughout this interview, this webinar. But the mindsets of individuals are changing as we're aging, as this great generation is aging. And I think they want to remain financially stable. They don't want to put a burden on their children, right? I'm experiencing that with my parents. They're in their low 60s. My dad just had surgery, and guess who got to do the lawn for the last 3 months? They don't want to put that burden on their children and I guess interrupt their current lifestyle to just really take care of mom and dad. And that's where this product fits, is the ability at the older age, I guess, protection from high costs in this long-term care struggle that a lot of Americans are going to face. And here's some statistics behind long-term care. I know everyone can look at this. Everyone's probably seen a marketing piece like this, but I don't know who all's on the call or where you're located. You can always call IMES. If you have never heard of what happened out in the state of Washington when it comes to long-term care, I urge you to give Matt a call. I know he probably had experience with the state of Washington. And it's not just going to be the state of Washington. We know there's going to be states that are coming out with some new legislative that requires individuals to have long-term care. So an awesome opportunity to have this arrow in your bag. And you know, one of my biggest percentages here, or biggest facts, and since it's staring right here in front of me, 70% of those turning 65 today will need some level of long-term care services or support. I don't think 70% of the individuals today turning 65 have any type of long-term care coverage. I'm guessing that number is quite a bit lower. And here's our age in place. 88% of the adults today between age 50 and 80 want to age in place. That's basically they don't want to move. They don't want to go into a retirement facility. They don't want to go into the 55 plus community. This product allows those individuals to live from the comfort of their home at those older age when they are in need. And the other thing, not to highlight a ton on this page, but how about cost of long-term care and or cost of monthly skilled care, right? Close to $8,000 for a semi-private nursing home, $4,500 a month for assisted living, $4,500 for home health aid. You know, if we can build this into a client's portfolio today, we can definitely have a stress-free type of long-term care incident down the road. And not to mention, you know, when the next clients come in, I guess, or what I would call a beneficiary comes in, you can know that you have the long-term care provided for mom and dad. So it's an awesome opportunity to visit this. You know, I mentioned kind of the caregiver strains, right? That would be me taking care of my mom and dad, and what type of effect does that have on me and my family, right? And that's a lot of this generation is worried about that. You know, I think the generation that's getting pitched long-term care right now probably took care of mom and dad, and I don't think that's the same here as it is in 2023, depending on maybe where you live. But obviously, the time, you know, I think I would have to quit my day job if I had to take care of my mom and dad here. Financial, that'd be a huge burden on my family. Obviously, emotional, social, I'd lose friendships, right, and physical. So it's not only are the clients we're talking about this with, but we have to provide that support to the family as well. So it's a true plan when it comes to that. I'm going to switch kind of stories here and go over the Never Stop Wellness program. I think we we know why we need long-term care, right? I think everyone on this call does. Here are some of the additional benefits with the Bridge program. And this is the Never Stop Wellness program. So this is a way clients can earn additional long-term care built inside of the product. So this is basically free money for them to do certain activities through the Never Stop Wellness Allies. And what are some of those activities? And I have an example of a David later on here I'll share you. But really, the clients are going to be picking three major things: preventative, treatment, or adaptation type of mentality here. Here are some of the things they could pick to focus on for the 2 years to earn the additional credits. Things like stress reduction, bone health, nourishment, nutrition, life engagement, hobbies, right? So things like playing golf. Maybe we're not drinking, smoking as much. Maybe we're maintaining an active lifestyle, going to the doctor, going getting hearing aids, going to the eye doctor, and then things like adaptation. As far as like home modifications, right? Moving the master bedroom from the second floor to the first floor for no steps, things like that. You can earn additional credits or additional long-term care credits to this plan. So when we talk long-term care, you know, one of the highlights on the product is just the pure base coverage ratio that we have allowed inside of this product for clients for long-term care needs, right? Obviously, these are the three underwriting classes: preferred, standard, and secure. Preferred is going to be your highest health rate, standard rate middle, secure low band, and that is a automatic or a guaranteed secure bucket as well. So here are the coverage ratios. You know, 3 times your leverage of your money at preferred, 2 times plus your money at standard, and then here it is at secure. So awesome opportunity to earn long-term care credits, I guess you can call it, or leverage on your money for long-term care. And why are those so important? I can go into some more detail, but obviously if we're giving 315% coverage ratio for long-term care benefits, there's a give and take, right? we don't maybe have as much of an accumulation option when it comes to the coverage ratio. You still have the same caps and par rates, but there's just a different fee associated with it. But awesome opportunity, as you can see here, to earn long-term care, to have long-term care access for your clients. And you can dial this up and down. You don't have to take the highest long-term care coverage ratio for your clients. You can find a middle ground depending on what your preferred standard or secure underwriting class is, but that is a super detailed conversation that I'm sure Matt and I would love to have with you on a one-on-one basis. So let's just get a feel for the product more than just kind of some of the highlights. Issue age 55 to 80 in most states. Minimum premium $50,000. Here's where I always forget to mention non-qualified only. There it is. It is flexible premium. Think of this product more or less as just a first year type premium with the ability to add premium down the road. When I'm going over all of my kind of illustrations and conversations with the agents, I tend to think just more or less first year premium because premiums after year 2 do not get that coverage ratio. So think more dump, forget as far as first year type premium. 10-year product, 10% penalty free withdrawals after year 1. So it still has that feel of a fixed index annuity, even if you don't use it for long-term care coverage. And then here's our street comp, 8% at age 55 to 75, 76 to 80 at 6. And we are running a additional 1% commission special between now and the end of the year. So that does go through December 31st as well. So awesome opportunity. And you know, when I talk to agents about this product, I typically don't go straight into long-term care type conversations. I try to get them very, very excited about this base fixed index annuity accumulation product. We have a 5% fixed interest rate on this product. We have a 10% cap on the S&P 500. And these aren't just teaser rates. You know, we're not just trying to get sales of this product and turn this around down the road. Here at EquiTrust, I'm proud to say we have renewal rate integrity, and I can prove that as well. We actually have every product that has ever been issued by product, by date, renewal rate out online on the agent website. I don't know of another carrier that gives you access to look product by product, day by date at renewal rates. And I know why. They're scared of something. They're scared of what happened. And we at EquiTrust, we're not trying to hide behind anything. Are we perfect? The answer obviously is no, but we're not hiding behind anything. So here are the current caps and par rates. And, you know, I know we've covered everything long-term care up until this point, but this is an amazing fixed index annuity, even without the long-term care coverage, paying 8% street comp. So it's an awesome opportunity, even just with the fixed index annuity. Some additional things on the
big benefit in this contract is that it actually has a great accumulation side. A lot of these long-term care products that came out, you know, 10, 15 years ago, the accumulation side was horrible. The clients were not making any money. They're paying these big fees. Their values are dropping. With this contract, I mean, you're going to have some really good growth potential, and you kind of dial back the amount of coverage you have based on the client's health. You're going to see the accumulation side really grow, and they're still going to have these benefits paid out, you know, on the other side when the long-term care needs come about. It's really a great combo contract, very strong.
It is. Thank you for that. So just some of the you know, automatically included within the Bridge contracts. You know, I think a lot of people in this space, they either get old, they get tired of a certain carrier that gets declined consistently, or maybe these one-off. It is a guaranteed issued product. I think that's a huge advantage. There's massive tax-free benefits due to the Long-Term Care and Pension Protection Act. It's a flexible coverage. We do have an inflation protection, I guess you can call it that, as far as the coverage grows and how the actual product grows with the coverage ratio, and then obviously the ability to earn additional long-term care coverage. That I'll go over here in a moment here. So I apologize if I spent a little too much time there in the early rounds, but here you go. how does this work? I always just think of this benefit base as kind of an income rider type base. It's just how I always think of it. Left-hand side contract value, right-hand side benefit base. How does that benefit base grows? Well, you have your coverage ratio that's at issue that grows up at a 2% compounding growth for 20 years or until time of claim. And then you also have wellness credits if your client decides to participate in the Never Stop Wellness program. You have that full bucket, divide that by 60 and gets you your monthly payment for long-term care, the 5-year coverage. That's the easiest way to think of this is kind of right-hand side, left-hand side, and most people are familiar with income riders, so that's how I always think of it. Benefit base, very similar to an income benefit.
And you guys have a really strong software program, so you can go through and kind of find the sweet spot for your client. Maybe they want to get so much per month, over that 5-year period. You can kind of price it down and see how much they have to put in based on their health situation, to get those benefits they're looking for. Plus that inflation is going to go up 2% per year on the coverage itself. So it's a great combo contract.
Yeah, definitely. I have agents consistently calling me up with a 67-year-old wanting to see what $5,000 a month benefit would get them at age 82. It's a consistent quote, and it's really, really powerful to see, how you can get $5,000 a month with the little premium it is today, and just base that off of how it can protect that client's nest egg in a long-term care need. So I am going to go over this individual. His name is David. I think this is an awesome opportunity to maybe you envision a potential client. This David here, he's a good-looking guy. He's age 65. He's obviously a preferred underwriting class, and his current coverage ratio, he maxed out at 315. And, here's some objectives as far as Mr. David. Maybe these are some of the objectives your clients have as well. He wants to live independently as long as possible. He wants to preserve his assets, and he wants to avoid this burden of, making his children basically assist him as he ages. So Mr. David walks in the office. He had a $250,000 initial premium. He went through the underwriting, right? The 20-minute Zoom call. He got preferred, coverage ratio 315. His initial benefit base for long-term care coverage was $787,500. So awesome opportunity there for David. And what does that look like in action? There's a lot of movement on the slide. I apologize, but 10 years down the road, right? So David was 65. He's now 75, and he has this claim type of situation. He was able to grow that $250,000 into a bucket of long-term care for $17,132 a month. That's including this vesting period with a long-term care base, the extra 2%, right? That grew for until time of claim, and then his additional wellness credit. So awesome opportunity for folks like this to have a huge long-term care return in times of need. And I know we just kind of went over that example of 17,000 plus, but here was kind of David's story, and this might be once again one of your clients, right? He wants to diversify investment portfolio. He has a diversified investment portfolio, but he's not sure if it's enough. Maybe an individual hasn't talked about long-term care with him. He's got an aging dad at 93. His mom unfortunately passed away, and he doesn't know if he can afford long-term care, right? Maybe he had that conversation. Maybe his dad had the conversation about long-term care and had some issues. We have brand new long-term care options for this clientele base that's going through hopefully everyone's office right now. And obviously the solution was the Bridge. As far as a fixed index annuity, continue to diversify his portfolio. Maybe didn't have as much safety valve. We got the science-based personalized wellness program and then a long-term care rider. And a lot of people sit and ask me, how did he earn these additional credits, right? How do we earn the additional $67,000 in long-term care? For this situation, David used a Calm app to help improve his sleep. he went to the doctor, went to the hearing doctor, got his hearing test, and has some new hearing aids. And then he did some yoga, and he earned additional credits throughout this product or throughout those 10 years. And here's once again some numbers to put it into play. His benefit base grew to just over 950,000. He earned additional wellness credits by using the sleep app, doing the hearing, doing yoga, to earn additional 67,000. I think some of these numbers are off a little bit over here. I apologize. Just over $1 million turned out to 17,000 for those 5 years. So awesome opportunity. As far
How
as
long
that
is the
goes.
vesting schedule? Is it 5 years?
It is. It's a 5-year vesting schedule. So you can
20,
still
40, 60, 80, 100?
correct, and you can still trigger a long-term care claim prior to the vesting schedule being completed. You know, there's a huge benefit as far as the coverage ratio goes, and it being a no decline as well. So there is a small vesting period involved in there as well.
Sure.
And so, you know, when you guys are sitting here thinking, learning about the Bridge product, you know, who can I talk to, right? Who might be one of those clients that, you know, we sit down through an annual review process and we think, you know, maybe we need to call back Matt or Tim and learn about this Bridge again. I think we have a solution here. And who are those folks? You know, the low-hanging fruit, I think, is 1035 exchanges from annuities or life insurance. I don't know if you guys have been in the business long enough. Someone has non-qualified fixed or fixed indexed annuities out there. Most people have some sort of life insurance, variable annuities as well. Maybe it's a money market, checking, savings, CDs. Maybe it's the super lit low-hanging fruit. And you can also think of this kind of like a MIGA alternative, or maybe someone has a bunch of MIGA ladderings and they don't have any long-term care type options. The easiest thing I can tell is if you've ever gone through a long-term care type of decision and someone was declined, what a great opportunity. They like the product. They see the need for the product. Have them give Bridge a chance. You know, it's not your traditional long-term care, but at the same time, if those individuals went through that process, it'd be an awesome opportunity. And if you guys aren't doing annual reviews, I highly suggest you start. This is an awesome opportunity to revisit those clients that you've already had in the door, and double check, make sure they even have that conversation about long-term care, which is needed.
Question came up, Tim, on the 2% annual increase for inflation.
Yeah.
Is that 2% based on the accumulation of cap value, or is it based on your total coverage value?
So it's the benefit base is going to grow at 2%. So think of it, you know, kind of like an income rider. I don't know what all percentages are out there, but that will grow for, you know, 7, 10, 15 years, depending on the company. Think of that same type of mentality. It grows for 20 years or until time of claim. So 2% on the benefit base. And there is an
option. Came up on the vesting schedule again. So let's say the client has, you know, 100,000 they put in. Let's just say they had $200,000 of benefit. So you got extra $100,000 there. That, you know, of the, you know, amount at risk. Let's say they go in just after the third year, so you're 60% vested. So would you have $160,000 of balance there, being plus any inflation on top of that?
For like basic math and conversation, think of it that way.
Right.
There's a little more detail into it. It's actually based off the net amount at risk. I'm not going to bore you with a bunch of like small minute details. But I always think of it as, yes, if you had 100,000, 3 years, 60%, think of it as like the 160% is kind of vested as far as 60% of your original benefit base is kind of vested with 2% growth. And that doesn't
go up. You're locked in at that point, correct?
Correct.
So let's just say that, you know, you live 3 more years, your benefit's not going to keep going up based on the vesting schedule. You basically locked it in when you made your claim.
Correct.
So if they were to wait 2 more years till they're 100% vested, they'd be better off maybe just pulling money out of a different source or taking out your 10% free withdrawals, correct?
Exactly, exactly, and that's why it's really nice to have that flexible kind of fixed index annuity chassis on the contract value side. You can take out 5, 6, 7% if you want to on a systematic basis to defer that. I will go out and do like a live illustration here, and I know the vesting schedule, it trips up a lot of people. I know it's very important to understand, but it's not that big of a change down the road when we look at it. So I'll definitely highlight that here in a moment.
Right. If your client is, 2 months away from being 80% vested or 100% vested, you really want to wait for that claim until you get past that point and just pull money from other sources. That way you have a much better total moving forward. Something to definitely keep in mind when, trying to figure out when to do a claim.
Yeah, and the key thing there is to what assets are we pulling from. It might make sense to go ahead and trigger it with Bridge. Due to the Pension Protection Act, it comes out as a 1099 long-term care. It helps out with taxes, and it might not be, right? It just kind of depends on your client. That's why it's nice to have a flexible option or different avenues to pull funds from.
Mm-hmm.
Also, I did want to mention this. We came out with this 1st of July. We are running a additional kind of compensation type situation with the Bridge called Bridge Bucks. It's for your first 3 cases. Your first case is an extra $1,000. Second case, $1,500. Third case, additional $2,000. Unfortunately, this doesn't repeat. Once you go 4, it doesn't go back to 1. But awesome opportunity to earn some additional commission through the end of the year as well. So super excited about this. And I do have the website pulled up here. And I just want to give you guys a quick overview of this Bridge microsite. I think it helps to know where it is. It helps to see something before you just go out there and dive in. But this is the pure microsite. This is where you're going to get all of your information. This is where you're going to conduct new business as well through the whole entire process. Basic key information of the product out online, some videos, some different educational pieces. I mentioned it's not available in each and every state. Northeast, we're getting close on some states. California, I'm sorry, but you should know that products don't get approved out there very quickly. But all the green's approved, and this gray feature is not approved, and just our current caps and par rates as well. Some basic information about the underwriting session. If you are going into a meeting with anticipation of looking at the Bridge for your client or even going to schedule the underwriting, you have to watch this video. This will simplify the whole process for you. Just like I'm showing you this website so you're comfortable, your clients are going to experience a Zoom call for maybe the first time. So it's very, very important for them to understand or maybe just give a quick preview of what they're going to see out online. And it gives you a free question so they can ace that question as well. Here's some marketing materials. This is agent-facing marketing material. Here's a Bridge user guide for app entry and underwriting questions. This is a great opportunity for you. And I did not have the 5 questions for agent underwriting. And I know this is probably small on everyone's screen. Here are the 5 questions as far as underwriting goes. Like I said, we don't have a height weight chart. We don't have tobacco, non-tobacco. These first 3 questions are knockout questions. If we answer yes to one of these first 3 questions, the client does not have to go through underwriting, and they are going to be automatically at a secure case. Question 4 or 5, you can answer yes or no to and continue with the underwriting process. And I've seen individuals still get preferred answering questions 4 and 5 yes. So here are the 5 questions that are asked through the underwriting process. We do have opportunity for kind of the solicitation type marketing pieces out here. I'm going to go to the state of Texas. If you're working out of Texas and you work out of Oklahoma, just be wary. Sometimes some of the marketing pieces aren't approved in all states. We do have 3 new pieces that are actual ads that you can throw out on social media sites. Maybe it's a mailing campaign that you're doing. So we do have some marketing pieces that are triggered directly to consumers. That is an option. You can put your name, your business, phone number, email address, things like that on there. But it's not approved in every state. So for instance, if we change Texas to, we'll change it to Iowa. I'm not sure if Iowa's approved or not. There you go. See, it's not approved in Iowa yet. And these are on a state-by-state basis, so our marketing team is working very hard to try to get those all approved. There you go. Alabama has them approved. So I wanted to go over one example here with everyone. And I use Uncle Jim. You guys have dealt with me in the past. I'm usually dealing with Uncle Jim at some point in time as far as a conversation goes. And I'm going to use age 65, and I'm going to use a claim age of 82. We had a client with $100,000 at age 65. We're working Uncle Jim's healthy. He's good to go. He's at a preferred underwriting class. This is a basic illustration. I call it the quick illustration. It's a great conversational type illustration you can use with your clients. It's not 30 pages of a bunch of numbers. It kind of goes over some of the marketing pieces I shared in our PowerPoint slide. As far as the Bridge goes, just going over, obviously, Bridge, wellness, long-term care planning, the Never Stop Wellness program is highlighted on a page. I actually shared one of these slides with you here as far as the cost of traditional long-term care. And down here at the bottom is their summary of monthly benefits. We had 315% highlighted, and then the vesting schedule. I know we had a couple questions here, so let's highlight this vesting schedule. So Uncle Jim started this Bridge product with $100,000, and he had an unforeseen incident at the end of the first year, and he actually had to trigger long-term care benefits, right? So he went from being preferred to needing long-term care super quick. And that super quick instance still got him $2,402 of monthly long-term care benefits for 5 years, right? So he did not go through the full vesting schedule, but still had $28,824 of annual benefits coming from the Bridge. If he, for instance, made it to year 4, the difference between year 4 and year 5, it's roughly $1,000, right? Based off this $100,000. But at the same time, we have access to this long-term care coverage, no matter when it comes about. And then you see after we get year 5, we don't see as big of a change, but because of the 2% growth in that in the kind of the income side bucket or the benefit-based bucket, we still have a benefit growing for long-term care as they defer. So that's kind of your highlighted version. I probably should have made this bigger. I apologize. As far as the maximum coverage ratio. And just for conversations, just so you can see, I'm going to change this to 215% as a selected coverage ratio. And I'm going to highlight that same benefit kind of area. And this might get a little too techy for everyone, but think of this over here, maximum coverage ratio as preferred. I minus 100 gets you the preferred underwriting. So here's your difference between preferred and standard as far as the actual underwriting class goes. As you can see, there isn't as big of a difference with the vesting schedule for preferred or secure, just the way math works and the net amount at risk. But at the same time, you can still have that benefit. So I always think, if we're dealing with a client that's probably going to need to obtain long-term care coverage within the first 5 years, they're probably going to be at a very low coverage ratio based off of the underwriting. So you can see there isn't going to be much of a difference because there isn't as much of a net amount at risk. And like I said, Matt or myself, we can talk to you about the small details all the time if you need to. So that's the website. That's kind of the Bridge. I know I kind of covered a lot there, and I talked quite a bit.
Take a look at that client there, Tim. You look at year 6, and they got preferred. That benefit is, almost $6,000 a month. That's $72,000 a year. That's with a $100,000 deposit. So, let's say they live 3 years in the facility. mean, you're looking at 300 grand they've taken out on a $100,000 deposit. That's a huge return. That it just shows how quickly those values grow on those coverages.
Yeah,
I
it's
mean,
a great benefit.
that's a huge benefit. I mean, if you look at what it costs right now for assisted living here in Omaha, you had that chart up. It's about $8,000 a month. So you're at $8,000 a month, and this is paying $6,000 of that. If they're getting Social Security, their coverage is pretty much taken care of with that $100,000 deposit. So that's a nice thing to have moving forward.
Correct. And I think one thing, and I'm not out of material, but the one thing I do like to highlight at this time is, if you're using a traditional lifetime income benefit rider with a 2 of 6 ADL benefit doubler, and you're calling it they're covered for long-term care, we need to have a conversation. This product is true long-term care. It will beat any income doubler out of the water. If we need to start working on split tickets with maybe another annuity carrier that might be a little more, I'd say, competitive when it comes to the guaranteed income side, but then look at the bridge for the actual well-being portion, or the actual long-term care coverage. We need to have that conversation. Matt needs to have the conversation with you, because this is night and day difference. If I ran
Hands down, way higher coverage.
Correct. If I ran the highest guaranteed income product for this individual at age 65, turning on 75, it's right around $17,000 today, which means $34,000 as far as the well-being benefit, and this at 6,400 is giving $76,800. So it's night and day difference. It's built for this. It's based off different actuarial tables, because of long-term care. And all I'm saying is, if we're telling clients they have long-term care coverage because they have income doublers, we all need to have a conversation. It's nothing you've done wrong. It's just how some of it's been marketed, and it's a great opportunity to revisit with those clients, and even look at maybe taking withdrawals from existing pieces of business, and looking at true long-term care coverage for them if they like that fixed index annuity feel.
And if you look at the accumulation side on those income doublers, accumulation is way less. I mean, you're looking at 2% caps, 2% fixed rates, where this has a 5% fixed rate and a 10% cap. You're looking at, 3-4 times higher the rates on this bridge compared to a really strong income payout contract that has very low accumulation.
That's correct. That's correct. Well, I think it's an awesome opportunity. I think if you have a client in mind, you can always give EquiTrust sales support a call. I know I'm sure Matt has the number offhand. I'm in my webinar mode, so I can't remember phone numbers. You can always have them reach out to me as well. You can give us a call.
IM's number is 800-255-5055. Glad to go over this with you. Sorry we're a little bit long today. I like to keep these under 45 minutes if I can. I know Tim's done a great job today with this presentation. Anything you want to finish up this morning, Tim?
No, I just think, have an open mind about the product. I think a lot of people have the tendency to kind of go back into a shell, look at the product they've been writing, and kind of fit that consumer. I'd say open up the door, give us a call, let's have a conversation and see if this could be a fit for your client. We're getting a lot of traction, a lot of new agents, and very excited about the product. So we've heard all the questions. Don't be surprised. And every question's a good question, and I'd be more than happy to assist with your first client.
Yeah, one thing that came up, question about the contract value when the benefits turned on. So the accumulation value will drop dollar for dollar based on what's taken out of the policy. So, if your accumulation account is $200,000 and your annual benefit is $100,000, I mean, you're going to be going through that accumulation account pretty quick. But, once you get past your accumulation's gone to zero and they're still paying a $6,000 a month benefit, I mean, your client is way ahead of the game based on that. So yeah, it's dollar for dollar reduction, is it not, Tim?
That's correct. You're 100% spot on. And if they never turn on claim, that full $200,000 in your example is a death benefit for the beneficiaries. So
Right.
it's an amazing opportunity with that growth on the base contract value side. And the base contract will continue to grow or have index credits or fixed credits throughout that decumulation phase as far as the long-term care withdrawals. So you never know. We could have a crazy market. You keep hitting those 10%, and maybe it still has some type of growth aspect to it. Obviously, it's depleting, but you still get some bang for your buck as far as index growth.
Right. I mean, take a look at the S&P index this year. I mean, we're already up over 20%. We're in July, and with a 10% cap, even the market, went backwards by 10%, and it's still up 12% for the year. You're going to max out that 10% cap. So definitely doable. I mean, a lot of people think sometimes these caps just don't get returns, but when you're doing it straight off the S&P, and the S&P has a good year like it's having this year, I mean, there's a good chance you're gonna make that 10% return. Otherwise, appreciate you being on today, Tim. Great examples you went over on the bridge itself. If anyone out there does have a sample they want run up for a client, we're more than happy to get that done. I know that we've got 8 specialists here in the office on the marketing side that can help you out with any bridge quote you may need. You'll get the quote back within a half an hour to 45 minutes from us and be able to move forward. And it's really a good eye opener for your clients to see, how much coverage they can get based on, even a $50,000 deposit. They don't have to put 100 in. Start that $50,000 deposit, especially if they're younger, where that thing can grow. They're looking at some really nice numbers down the road. And if you take a look at, what people throw into long-term care coverage, just straight up coverage itself, I mean, they're throwing money into an empty well, and their beneficiaries aren't going to see what you get out of the bridge down the road, especially if your client does not utilize long-term care coverage as much. They go in for 6 months and pass away. You're still going to have a sizable amount left in this bridge contract to be passed on to the bennies. So I look at it as it's a win-win. The beneficiaries win and the client wins. And I think some of those percentages are low moving forward based on who's going to be using long-term care coverage. I think you're going to see it closer to 80% plus from what I've seen happening these days, with people living longer and their bodies are falling apart when they get in their 80s, and they have to have, places to go to get coverage, or have people come to their house to help with what's going on. So definitely a huge market out there right now for this. Otherwise, I'm going to have a great week. Enjoy the rest of your summers. Appreciate you joining us on a Tuesday morning here with Tim. My name is Matt. Any questions, give me a buzz, 800-255-5055. Enjoy the rest of your week, everyone, and we'll talk to everyone soon. Bye now.